Hi everyone, welcome to Digital Expert. Recently, the Indian stock market has been facing significant volatility. The Nifty, which touched an all-time high of 26,277, has corrected by nearly 3,000 points. So this fall is mostly because of the weaker than expected Q3 earnings, especially in the FMCG sector. For example, the Hindustan Unilever Limited has given almost no returns in the last 5 years. So, with this, everyone is now looking at the upcoming Union Budget 2025 for some relief. So, people are hoping for tax cuts and more support from the government to boost the spending and help the economy recover. Even though the market has been down, some companies have done really well in the Q3. So in this video, let's talk about 10 such stocks that has shown strong performance despite the challenges. Don't forget to subscribe to this channel and share my videos with your friends and family or anyone who might be interested. So let's get started.
I'm not a SEBI registered analyst, so do your own research before investing in any stocks.
The first stock is a cloud computing company providing a range of cloud infrastructure and services. So, cloud computing is a booming sector with enterprises increasingly adopting digital infrastructure. So, this stock plays a significant role in the data center segment by providing scalable and high performance cloud infrastructure that supports the rapidly growing demand. So, this company competes with major players like AWS, Microsoft Azure, and Google Cloud, but it differentiates itself by focusing on the niche markets and providing cost efficient services. The market cap of the stock is 7,326 crores. The stock I'm talking about is E2E Networks. The current price of the stock is 3,488 rupees. E2E Networks caters specifically to the Indian business, offering localized solutions and competitive pricing. Their pricing model makes cloud computing accessible to startups and small businesses, fostering digital transformation in India. With GPU based cloud services, E2E Network supports the growing demand for AI, machine learning, and data intensive applications in industries like healthcare, fintech, and e commerce. The solutions allow businesses to scale their infrastructure as they grow, making them a reliable partner for long term business. E2E Networks net profit grew 107.8% year on year from 56 million to 116 million rupees. The net sales rose 73.7% year on year to 416 million from 240 million. L&T is planning to acquire a 21% stake in E2E Networks, and this will help expand the company's cloud service offering as part of the data center business. Price to earnings ratio is 186, higher than sector P ratio of 34.96. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 6.4%. The second stock is a company that specializes in software product development and digital transformation solutions. Its expertise in cutting edge technologies like the AI, cloud, and IoT positions it as a leader in the rapidly evolving tech landscape. They operate in multiple countries, serving a wide range of clients, including the Fortune 500 companies. The market cap of the stock is 88,608 crores. The stock I'm talking about is Persistent Systems. The current price of the stock is 6,332 rupees. Persistent Systems help businesses modernize their IT infrastructure, migrate to the cloud, and adopt digital first strategies. They also provide solutions in areas like DevOps, automation, and data analytics. They build and integrate enterprise grade software for industries such as banking, healthcare, telecom, and manufacturing. Persistent Systems reported a 30.35% year on year jump in its consolidated profit. Revenue from operations during the quarter rose to 22.6%. Its order booking for the quarter ended on December 31st was $594.1 million in total contract value and $428.3 million in annual contract value. Price to earnings ratio is 71.87, lower than its sector P ratio of 31.49. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 22%. The third stock is a prominent player in the technology and IT infrastructure space. They specialize in providing high performance computing solutions, data center services, and storage solutions. The company offers a range of data center solutions, including the design, implementation, and management of data centers. The market cap of the stock is 10,922 crores. The stock I'm talking about is NetWeb Technologies. The current price of the stock is 1,939 rupees. NetWeb design and manufacture supercomputing systems for tasks that require massive computational power. They also provide enterprise grade storage solutions for managing large data sets. They support industries with demanding data needs such as the financial services, media, and healthcare. They also play a vital role in sectors like the defense, where the localized and secure IT solutions are critical for national security. The firm reported a 16.56% rise in profit to 30.32 crores, led by demand for artificial intelligence related projects. The revenue from operations climbed about 32%. So, this is the highest quarterly income and PAT ever recorded for the company. The price to earnings ratio is 108.01, lower than a sector P ratio of 133.71. Debt equity ratio is lower than 1. Return on equity for the last financial year was 21. The fourth stock is from the recycling sector. This company recycles lead and lead products, plastic, and aluminum using environmental friendly processes as well as provides turnkey solutions. So, this stock provides in house recycling technology, technical consultancy, and services for recycling. The market cap of the stock is 16,046 crores. The stock I'm talking about is Gravita India. The current price of the stock is 2,164 rupees. The FIAs and mutual funds have been progressively increasing their investment in this stock. The company's products are classified into five verticals: lead recycling, aluminum recycling, plastic recycling, rubber recycling, and turnkey solutions. So, with a widespread international presence, the company's clientele spans across 375 customers across Asia, Middle East, Europe, and America. The revenue increased by 31.49% year on year, and the profit increased by 31.48% year on year. In comparison to the previous quarter, Gravita experienced significant growth as well, with revenue growing by 7.44% and the profit increasing by 8.24%. The operating income demonstrated a healthy increase, up by 29.8% quarter over quarter and 2.47% year over year. So, this positive trend reflects the company's robust operational performance and strategic initiatives. The price to earnings ratio is 59.74, lower than sector P ratio of 16.4. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 28%. The fifth stock is a global digital services and solutions provider specializing in IT services, business process outsourcing, and digital transformation. The company focuses on industries such as banking and financial services, insurance, travel, transportation, and healthcare. They also provide cloud strategy, migration, management, and optimization services. So, this stock has a high client retention rate and has partnership with major technology providers like Microsoft, AWS, and Salesforce. The market cap of the stock is 54,993 crores. The stock I'm talking about is Coforge. The current price of the stock is 9,197 rupees. So, Coforge helps organizations with hybrid and multi cloud environments to scale their operations securely. They also offer data management, business intelligence, and predictive analytics services. The Coforge reported a 10.3% rise in the net profit for the December 2024 quarter. The profit came 2,680 crores in the third quarter against 2,428 crores in the corresponding quarter last year. The rate of attrition for Coforge stood at 11.9% at the end of the December quarter. Revenue rose 42.8% to 3,318 crores against 2,323 crores in December 2023 quarter. During the third quarter, logged a robust total order intake of $501 million during the quarter. Price to earnings ratio 68.99, higher than sector P ratio 31.49. Debt equity ratio is lower than 1. Return on equity for the last financial year was 13%. The sixth stock is a full stack digital insurance company. It offers a wide range of non-life insurance policies across sectors such as motor vehicle, health, travel, and property. The market cap of the stock is 26,395 crores. The stock I'm talking about is Go Digit General Insurance. The current price of the stock is 332 rupees. The company has sold almost 1 crore policies to 6.2 crore customers in the December quarter, taking its market share in the insurance space to 3.3%. The third party motor premiums remain the single largest contributor to Go Digit's revenue. Go Digit's market share in the motor insurance space stood at 6.1% at the end of the December quarter. The second biggest source of revenue for Go Digit is the health insurance. The company reported a nearly threefold rise in its net profit in the third quarter. The total revenue stood at 2,371 crores, up by 7.11%. The profit after tax zoomed 176.46% in the third quarter. The company reported a 10.24% increase in the gross written premiums. Price to earnings ratio is 92.32, higher than a sector P ratio of 19.87. Debt to equity ratio is lower than 1. The seventh stock is a company primarily involved in the manufacturing and supply of industrial gears and material handling equipment. So, this stock is one of India's largest manufacturers of industrial gears. The products are used across industries like power, steel, cement, sugar, and mining. The market cap of the stock is 12,363 crores. The stock I'm talking about is Elcon Engineering Company. The current price of the stock is 560 rupees. The company designs and manufactures bulk material handling systems such as conveyors, stackers, reclaimers, and ship loaders. So, these systems are critical for industries like ports, mining, and thermal power plants. Elcon offers tailored solutions for specific industrial applications, including specialized gearboxes and handling systems. Elcon's products are integral to heavy industries, which are the backbone of infrastructure development and economic growth. It has also established a strong brand presence in international markets, particularly in Europe, Africa, and Middle East. The company's profits surged 18.96% year over year, amounting to 107.54 crores, while revenue reached 528.89 crores. In comparison to the previous quarter, Elcon Engineering's revenue saw a growth of 4.08%. The operating income also rose by 28.1% on a quarter over quarter basis and 17.9% year over year basis. The price to earnings ratio is 33.21, lower than a sector P ratio of 45.86. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 20%. The eighth stock is from the packaging sector. So, this stock is the second largest glass container company in India with approximately 20% market share in the organized glass packaging sector. The company is engaged in the manufacturing, selling, and trading of building products and packaging products. The market cap of the stock is 6,330 crores. The stock I'm talking about is AGI Greenpack. The current price of the stock is 1,021 rupees. When it comes to the packaging products, the company has a diverse portfolio, including the glass containers, specialty glass, PET bottles, and security caps and closures. 89% of the packaging products revenue comes from glass containers. Within this, the 75% is attributed to alcoholic beverages, 19% to food and beverages, and 6% to pharmaceuticals. The company boasts an impressive clientele with over 500 diversified institutional clients, including major names like Abbott, Coca-Cola, Glenmark, and Bacardi. The profit after tax is 35% year over year. The company's revenue from operations was 658 crores. The price to earnings ratio is 21.79, lower than a sector P ratio of 32.06. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 13.9%. The ninth stock is a leading player in the power sector, specializing in the manufacturing of cables and wires along with other related equipment. Its products cater to power generation, transmission, distribution, and industrial applications. The company also manufactures specialty cables for unique applications in the power and industrial sectors. The market cap of the stock is 39,466 crores. The stock I am talking about is KEI Industries. The current price of the stock is 4,466 rupees. So, KEI Industries manufactures a wide range of power cables to meet the demand of the power sector, focusing on quality, durability, and efficiency. KI supports the renewable energy sector with specialized cables designed for the solar and wind energy applications. They have provided strong volume growth guidance of 19 to 20% for FY26, supported by ongoing capacity expansion and robust demand in both domestic and export markets. It is targeting a 20% CAGR in the revenue from FY26 to reach its target of 25,000 crores for 2030. The company's net profit for December quarter climbed 9.4% year over year. Revenue also grew nearly 20%. Price to earnings ratio 61.78, higher than a sector P ratio 49.54. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 18%. The 10th stock is a leading provider of solar solutions, EV charger components, and power backup solutions. So, this stock is India's largest manufacturer of electric vehicle chargers. This stock is a market leader in India's EV charging sector, currently holding a 35 to 40% market share. The market cap of the stock is 3,431 crores. The stock I'm talking about is Servotech Renewable. The current price of stock is 151 rupees. So they provide many solar energy solutions like solar panels, solar inverters, EPC services, and solar street lights. So this company offers the lithium-ion batteries and other energy storage systems to complement the renewable energy sector. With India's push towards electric vehicle adoption, targeting a 30% EV penetration by 2030, Servotech's EV charging infrastructure solutions align with government initiatives like FAME2. India has set an ambitious renewable energy target, including achieving a 500 gigawatt of non-fossil fuel capacity by 2030. So the companies like Servotech play a vital role in achieving this by providing affordable and scalable solar solutions. So Servotech reports a consolidated 315% revenue growth and registered a 616.8% increase in profit. The price to earnings ratio is 126.16, higher than sector P ratio of 79.44. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 11.5%.
If you like this video, don't forget to subscribe to this channel, and thank you for watching.